Hi, you're watching Market Cafe on ET Now with me, Shreyanti Singh and Srishti Sharma. And over the next 1 hour, we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar. But speaking of stocks, then Srishti, firstly, let's take a look at the Wall Street and quite the sell-off that we had there.
Well, certainly. First of all, a very good morning to you, Shreyanti. But another great morning looking in for the global markets as well as for the Indian markets. But let's start with what the US did yesterday. It was a sharp fall from the day's highest points, and that Dow Jones closed with a cut of over 650 odd points. Yes, of course, there are concerns related to tariff, and even President Donald Trump announced 25% tariff on the imports of Mexico and China, and that will begin coming Tuesday. Now, talking about the other indices, then S&P 500 did a nosedive around 1.8%. So was Nasdaq, which decreased around 2.5% in the trade yesterday, and it was Nvidia that led the fall. 9% decline on that particular stock single-handedly is what we have seen, and that was on the back of export woes. Other than that, on the latest from President Trump, he has signed a 20% tariff on China. Trump has also said that he has actually scheduled an address at a joint session of the Congress on Tuesday to share his America First vision for the future, and talking about the tussle going on with respect to Russia, Ukraine, and the latest on President Zelensky. Then he has actually warned Zelensky that they won't be around for a very long time if he fails to negotiate peace with Russia. And just a while back, he has paused the military aid to Ukraine. But apart from that, it was the markets that did tank. The kind of one-way up move that we were seeing within the US indices seems like that is coming to an halt and taking a bit of a U-turn.
Well, absolutely a bit of a U-turn coming in as far as the Wall Street is concerned. But let's also take a very quick look at oil prices as well, because you do have an extension of the decline that we've seen come in as far as oil prices are concerned. So a fall of more than 1% on the back of reports that OPEC Plus is going to be proceeding with a planned oil output increase in April, and also on worries that what US tariffs would do to global economic growth and oil demand. Now, mind you that global economic growth has been quite a concern, and on the back of that, oil demand worries have also been worrying the markets, investors as well. The Organization of Petroleum Exporting Countries and its allies like Russia, known as OPEC Plus, has also decided to proceed with the planned April oil output increase. And that is also something that we're seeing coming in as far as reports are concerned. OPEC Plus, of course, for background, has been cutting output by 5.85 million barrels per day. That is equal to about 5.7% of global supply, agreed in a series of steps since 2022 in a staggered manner to support the market. So currently, when you take a look at Brent futures, 1.6% downtick is what you saw coming in. $71 a barrel is the kind of level that you had coming in as far as Brent was concerned. So managed to keep that $71 per barrel key level. But other than that, when you take a look at WTI as well, almost a 2% decline coming in for WTI as well. $68 per barrel is what you saw coming in as far as WTI is concerned. When you take a look at Bitcoin, though, that's also very important to note at this point, because you did have that rally come in after that crypto fund was announced. And when you take a look at the strategic fund, that was something that was powering the market. Traders, of course, grappling with concerns at this point that proposed tariffs were on track to take effect. Concerns about economic impact from those levies also overshadowed earlier excitement about that US strategic crypto reserve that I mentioned. Bitcoin, of course, was last trading down 8%, around those $86,000 levels as well. And that largely is the kind of handoff, the sort of sell-off that you've seen come in as far as Coinbase is concerned. You have a 4.6% downtick coming in for that. On your screens, you can see Robinhood as well, 6.4%. MicroStrategy, 14%. So very big sell-off coming in as far as Bitcoin also is concerned.
Well, certainly, US market is down, Bitcoin is down, and that is something that we have been tracking. But speaking with oil today, of course, all eyes will be on Saudi Aramco's earnings. That's the big earning that we'll be tracking globally. But back home, within the corporate action, Coforge board will mull stock split that is something that we'll be watchful of. Other than that, in some of the other events, it will be High Court to hear the pleas of ex-SEBI chief Butch and US Donald Trump president's speech will be the key to watch out for, and definitely the kind of tariff announcements on Canada and Mexico, they will go into effect from today itself. Other than that, it was New York Fed president that will be speaking, and let's watch out for the commentary on that particular front. So seems like an action-packed day indeed, Shreyansi.
Well, action-packed day indeed, lots to keep track of. But the biggest headline this hour, then the United States is pausing military aid to Ukraine just days after that spat between the two leaders in the Oval Office, according to reports. In fact, US is now pausing and reviewing aid to ensure that it is contributing to a solution. In fact, the pause is going to be reportedly lasting until Trump determines the country's leaders demonstrate a good faith commitment to peace. So that's the latest update coming in on that front, Srishti.
All right, in some of the other headlines, meanwhile, the Taiwan Semiconductor Manufacturing, as far as we know it, TSMC, will be injecting $100 billion to boost the chip manufacturing in the United States. Now, Trump has in fact called the investment a tremendous move by the most powerful company in the world. The new capital brings TSMC's total investment in US to $165 billion and will go towards building 5 new fabrication facilities in Arizona.
Alright, then let's keep it going with stock-specific news. Tesla shares were seen gaining after Morgan Stanley reinstated the EV maker as its top US auto pick, saying that the company's artificial intelligence and robotics efforts could actually power growth even as the mainstay car business tumbles. Now, in the note, Morgan Stanley has lauded the company's push beyond autos as sales face pressure from high US borrowing costs and fears Chinese competition as well, including from BYD, the likes of BYD. The note, in fact, reaffirms a target of $430, one of Wall Street's highest, which implies a 44% upside to the stock's last trade.
But keeping it with the autos then and moving from US to China, where an EV maker BYD has successfully raised $5.5 billion in what is being called Hong Kong's largest share sale in 4 years. Now, the company sold 129.8 million primary shares in the deal. The term sheet showed up from the original 118 million shares planned when the deal launched Monday.
Rather than moving on to some key commentary, billionaire and founder of hedge fund giant Bridgewater Associates, Ray Dalio, warns that the US could soon face a full-blown debt crisis if the Trump administration does not take immediate steps to rein in deficit spending. In fact, according to Dalio, the debt crisis could hit US as soon as over the next 3 years. He said, and I quote, "I can't tell you exactly when it'll come. It's like a heart attack." So that's important commentary coming in from Ray Dalio then.
And on to the biggest talking point that the global markets have been closely eyeing Trump's tariff. Donald Trump confirmed that tariffs on Mexico and China, Mexico and Canada are set to go ahead as both nations are now run out of the room to negotiate a deal. Now, starting today, all imported products from Canada and Mexico will be subject to 25% import duties. Trump has pointed to lack of effort from Mexico and Canada to shore up their borders with the US to stem the flow of vast amounts of fentanyl that have poured into the United States.
Rather than that's very
No
correct.
room.
Okay.
Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow. Vast amounts of fentanyl have poured into our country from Mexico. And as you know, also from China, where it goes to Mexico and goes to Canada. And China also had an additional 10, so it's 10 plus 10. And it comes in from Canada and it comes in from Mexico. And that's a very important thing to say.
Rather than that's key commentary coming in from US President Donald Trump. But on that note, time for a very quick breather. When we come back, we'll get you a check going on what the Asian markets are up to. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And Japanese stocks are the ones that are falling over 2%, leading declines currently when it comes to the Asia Pacific market. You do have those that tariff commentary coming in from Donald Trump. That is worrying markets at this point. So on your screens, 2% downtick coming in for Nikkei. And investors are quite jittery at this point across the board. But when you take a look at South Korea's KOSPI as well, it's not doing all that much in choppy trade, downtick of 0.6% coming in. That's the one that's declining the least. If I believe that that's the one that's declining the least unless those rates have changed. When you take a look at Hang Seng, that's also down 1.8%. When you take a look at Shanghai as well, that's also holding on to a tinge of red on your screens. 0.5% downtick coming in as far as Shanghai is concerned. Australia's ASX 200 as well. That's the one that is trading 1% lower. So that largely is the kind of handover that you have coming in as far as Asian markets are concerned. Now, of course, Nifty shut shop around the 22,100 levels, and currently what is being penciled in is a rather tepid start, Srishti. So let's see how that pans out for us. Definitely a very weak handover coming in as far as Asia is concerned, and even Wall Street.
Well, certainly, Shransi, the key to watch will be that whether or not we are able to defend that 22,000 mark or not, because for yesterday we have seen a good bounce from those levels. But amidst this volatility, it gets even more important to know that what these market biggies, the veterans, are trying to do to navigate the volatility. So we'll try to decode that at 9:20 with Ajay Srivastava, who is the CEO at Dimensions Corporate Financial Services. And other than that, we'll connect with Umesh Chaudhary at 9:30. Let's watch out for that. He's the Vice Chairman and MD of Titagarh Rail System. What is the outlook on the order book, the execution, and any delays faced there? We'll try to find out more on this one. Then at 9:50, we will be watching and having an interaction with Bajaj Auto on Feb Auto dispatches, how the numbers are panning out, as well as what is the outlook going ahead. Well, of course, all eyes are on the auto sales data. Just yesterday we had those, so we'll try to find out more on this one. And then at 10 a.m. we'll be connecting with the CMD of NHPC, Mr. Rajkumar Chaudhary will be us interacting, and we'll try to have a roadmap for NHPC. And then 10:20, a discussion on IPO not for the hotel business of Brigade Group. Nirupa Shankar, joint MD of the company, will be joining us on the show right now.
All right, then that's a power pack lineup for you right there. But
welcome back to Market Cafe, and today men in blue are all set to take on the mighty Australia in a nail-biting thriller match at Dubai, wherein Sunday India defeated New Zealand by 44 runs. With this win, India not only exacted revenge on the Kiwis, all eyes will be on playing with the pacer spinning combination of India. Times Network Karishma reported this earlier. Let's take a look.
Well, yes, absolutely. This promises to be a very, very exciting final. India versus Australia is always a high-octane clash. It's the rivalry that everyone looks forward to. Of course, comes to mind is the 2023 ODI World Cup, in which we lost in the final to Australia. And Indian cricket fans are wanting the Indian cricket team, led by Rohit Sharma, to avenge that when they take on Australia. And India has had a very, very good run in this particular tournament. They go into the semi-finals undefeated. They have won all their 3 group stage matches versus Bangladesh, versus Pakistan, and versus New Zealand as well. So India goes into this semi-final very, very high on momentum, and is hoping that they can continue the winning streak that they've had in Champions Trophy 2025. 2017 Champions Trophy, India has of course lost to Pakistan in the finals by 180 runs. So there's a lot riding on this tournament as well, and everyone's just hoping that India can make it to the semi-final, to make it to the finals after beating Australia.
well, absolutely. Thanks, Karishma, for that update coming in. So that's a nail-biting thriller that we'll be keeping an eye on around the same time that the market closes. But let's get you some more news and updates. Life insurers are likely to push back against the government's proposal to extend the free look period from 1 month to 1 year. In fact, the move aimed at protecting policyholders from mis-selling has raised concerns among insurers over long-term commitment and commission payouts. In fact, Anurag Shah is standing by with more details.
So recently, DFS Secretary has proposed to increase the free look period in insurance industry from 1 month to 1 year, and a free look period is a period where policy holders can return their policy if they are not satisfied with the terms and condition, and they can cancel the policy and can take the full refund. So as per our sources, insurers, particularly life insurers, are opposed to this move to increase the free look period from 1 month to 1 year, and they are seeking more clarity if these rules get implemented. Life insurers feels that 1 year free look period will be misused, and overall cost of industry will increase because till 1 year policy holder the policy holder after 11 months can switch up, can refund the policy, can return the policy and take the full refund. And for agents also there will be less participation, because agents generally get the commission after the free look period only, and agent won't wait for complete 1 year. So these are the main concern, but as said by the DFS secretary, that to curb the mis-selling, to give more rights to the consumer, to give more rights to the policy holder, government has proposed to increase the free look period from 1 month to 1 year. And insurers also think that recently surrender value norms were also changed, and more surrender value was given to policy holder after the first year also, so they will be overlapping. So these are the concern, but there is the other side of government also to empower policy holder to return their policy by increasing the free look period.
Well, thank you so much, Anurag, for getting us details. But let's move on to another story, and it's an 18 Hour News Brief confirmed, wherein IRCTC and IRFC have received a rating upgrade from the government. My colleague Prakash is here with more details.
It's a positive development for two CPSEs under the administrative control of Ministry of Railways, that is IRCTC and IRFC, as the government has decided to upgrade their status from Mini Ratna to Navratna. A very significant development coming in, as this decision will provide them greater operational and financial freedom. It's a confirmation of our news break, as well as we had reported this story in the month of October last year, when this proposal was being actively considered by the Ministry of Finance. Now, Department of Public Enterprises has come out with the official order. The status of both these companies has been upgraded to Navratna from Mini Ratna. Of course, that will provide a greater operational and financial freedom. Along with that, these companies will get more power to take their investments related decision, and will not have to approach government time and again. So it's a very significant development coming in. Along with that, if you look at the financial performance of these companies, IRCTC is a Ministry of Railways CPSEs with an annual turnover of rupees 4,270 crore, whereas IRFC's annual turnover is rupees 26,644 crores.
All right, thanks Prakash for that update coming in. Now, in view of the assessing Capex utilization in various ministries, the centre government reviewed status of key infrastructure projects in ministries the likes of railways, power, transport, etc. Now, according to sources, 75% of targeted FY25 Capex has already been achieved. In fact, Prakash Priyadarshi filed this report as well. Let's take a look.
Yes, sir. We are learning from our sources that the government has reviewed the status of key infrastructure projects in the country. Infrastructure projects of ministries such as railways, road transport and highways, telecom, power, coal and housing ministries have been reviewed. More than 1,700 key infrastructure projects comes under central sector have been reviewed by the government. And this is, a first such assessment in the year 2025. And the most important part is that the capital expenditure has reached 75% so far by Jan 2025. It's a very significant development coming in, and this is against the revised estimate of 10.18 lakh crore for the financial year 2025. Along with that, the ministries have been told to achieve 100% capital expenditure target for the financial year 2025. As you were aware, that the capital expenditure was little slower during current financial year due to Lok Sabha elections, but after that it gained momentum, and we have seen relatively higher spending during the second half of the current financial year. In addition to that, the government has also released rupees 1.15 lakh crore interest-free loans to the estates as against a revised estimate of rupees 1.25 lakh crore. So some positive development when it comes to capital expenditure target, and the government is also hopeful to achieve rupees 11.21 lakh crore capital expenditure target set for the financial year 2026.
Well, thank you so much, Prakash, for all those details. But with this, it's time to slip into a very short break. Viewers, don't go anywhere. We'll be right back.
Welcome back. Thank you so much for staying tuned in. Well, before we get you some more news and updates, let's also quickly take a look at the Asian markets and what they're up to at this point. You do have Japanese stocks leading the losses on your screens, 2.1% downtick coming in. As far as the Nikkei is concerned, in fact, you did, of course, have Japan's employment rate that came in at 2.5%, slightly higher than what was being penciled in. 2.4% was what was being penciled in. When you take a look at South Korea's KOSPI as well, that's also holding on to a tinge of red at this point. On your screens there, you have it 0.6% downtick coming in. As far as the KOSPI is concerned, when you take a look at Hang Seng, Shanghai, Australia's ASX 200, all of them have a tinge of red at this point. So, well, yes, Hang Seng downtick of 1.8% coming in. Shanghai, just a 0.2% downtick coming in on your screens. Lastly, ASX 200 also trading a percent lower, as you can see on your screens as well. So, well, that's the check going as far as the Asian markets are concerned, Srishti.
All right, so not looking that great when it comes to the Asian markets. GIFT Nifty also not indicating a positive start. But let's talk some of the sectors that will be in focus today. And today, of course, Jefferies is seeing a big opportunity for Indian companies to ride on to the semiconductor opportunity in the country. Now, in its latest note, the brokerage has claimed that the chip is the new oil, and companies like Pidilite Industries, Linde, Thermax and more could be eyeing supply chain prospects. Sharad joins in with more details on this one.
Jefferies has come out with a strong report on the semiconductor, and they have stated that $18 billion of investments are expected to come in the chip fab and the OSAT categories. Interestingly, the ecosystem is expected to quadruple the electronic production by almost 4 times, by 5 to almost the market of $500 billion by 2030. Now they have stated that chip is the new oil, and India has a strong model to replicate the success which they had seen in auto to also semiconductors. Now, what are the targets? That is something to look out for, and the government has given these targets. The production numbers are at currently $115 billion. That's expected to go up to $500 billion. And export also numbers, if you look at it, that's coming at 31 billion, and that can go as high as $240 billion. Now, out of this $18 billion investments, if you look at it, there are listed plays also, there are unlisted plays also. Tata Electronics combined basis is having the major chunk of it, of almost $14.3 billion of investments underway, followed by Micron Tech, which is unlisted, $2.8 billion, and CG Power and Keynes also coming in with minor contributions. But overall, $18 billion of investments are underway. Now, there are certain companies which are already manufactured in India. These companies include Apple, Foxconn, Pegatron, Jabil, Samsung, LG and Philips. There are some companies which are under the foray of evaluating the new supply chain opportunities in the semiconductor space, and these names include Pidilite, Linde, Thermax, Schneider Electric, Deepak Fertilizers, Jubilant Ingrevia and Praj Industries as well.
Thanks, Sharad, for getting us that very important update coming in. Well, Srishti, what really stands out to me in terms of the semiconductor boom, of course, is the giants that are manufacturing in India. They have quite some ambitious plans. In fact, when you take a look at Apple, that is planning $500 billion in terms of their US investment as well. They have also some ambitious plans coming in as far as India is also concerned. So that's very interesting. You do have a whole host of giants, especially the likes of Apple, Foxconn, Pegatron. So lots to keep an eye on as far as the semiconductor boom is concerned.
Well, certainly, and how these companies are panning out and planning their investments into that will be the key to watch out for. And we should not forget that it's Government of India as well taking steps in this direction to help with the policy support. But let's move on. Let's also tell you some of the stocks that will be in focus on the back of the news flow, and let's get in more details and the list, of course. And Varun is joining us with all that. Take it away, Varun. Good morning.
Good morning, Shishri. So, first of all, you need to keep an eye on Coforge because they have a board meeting today where the company is going to consider stock split. So, that stock would be in focus today. Other than that, Sudarshan Chemical, the company has completed the acquisition of Germany-based company UBEC Group, and with this, the company's overall presence will increase to over 19 sites in all over the region. So, that is one stock that you need to keep an eye on. Godrej Properties, the company has actually entered into an agreement on 15th of Feb with TCM for development of land parcel at Kochi. Now the company has said that the company has actually cancelled that agreement which they have entered with TCM. City Union Bank, the bank is actually doing branch expansion, and the bank has actually opened 4 new branches in New Delhi, Gujarat, UP and Karnataka. So keep an eye on City Union Bank. REC, the company has a board meeting on 7th of March, and the company is actually will actually work on revision in the overall market borrowing program that the company has for FY25. So keep an eye on REC, and also keep an eye on Titan, because yesterday you know that Goldman has come up with a report and they have added Titan to the Asia Pac conviction list. Today you have Macquarie, who have an outperform rating on Titan, but the target is 4,000 now. Macquarie says that in the overall consumer space, Titan is the preferred pick, and the rise in gold leaves cost for smaller player. See Titan's competitiveness rising actually. The lab-grown diamonds, they are actually not a big concern for this company, but yes, they have cut the EPS by around 3 to 4% due to overall lease cost and the near-term impact of jewelry demand due to high gold prices. So keep an eye on Titan as well today. Yesterday it was Goldman, today it's Macquarie who has come out with a report, outperform call and a price target of 4,000.
Alright, then we'll keep an eye on Titan and all of the stocks that you flagged for us, Varun. But let's also take a very quick look at some important commentary coming in from an 18-hour exclusive chat. US markets could underperform going forward, and that's the word coming in from Jefferies' Chris Wood. In fact, he also explains how Trump's policy mix, combining tax cuts, offers insights on gold's resilient performance as well amid this market turbulence that we've seen, and also talks about the exodus of foreign investors with tariffs that sparked a strong US dollar rally. So let's go across and listen in to what he had to say about a host of these topics.
The US, my view until proven wrong, is that the US stock market reached an all-time peak of share of world stock market capitalization at the end of last year. To be precise, on December the 24th, I think the US reached about 68% of the world MSCI all-country index. In my view, that is an extreme overvaluation and probably represents a massive peak. And my view going forward is that US equities underperform. This almighty peak in the US equity market, both from a relative and absolute return performance, also went hand in hand with growing commentary around US exceptionalism as applied to the stock market. Personally, I do not believe in US exceptionalism as applied to the stock market. I think there's one area where the US has long been truly exceptional in economic and financial matters, and that is that the US prints the reserve currency of the world. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So in my view, the dollar's in a peaking out process here, and the US stock market is peaking out as a percentage of world market cap.
So Chris, how long do you think this overhang will continue? Because a big reset button has been pressed. From globalization, we are moving to deglobalization, and it is generally believed that anything which is good for America is bad for emerging markets.
The tariff thing is a different issue. So Donald Trump's agenda as regards economic policy is, I have to admit, fundamentally contradictory. There's two aspects of Donald Trump's agenda which should be very positive for the US stock market, US economy. That is tax cuts and deregulation. But there's two other aspects of the agenda, namely, which should be bearish for growth. They are tariffs and, cutting back on immigration. So the question is, which of these two forces will prevail? My base case is that the tax cuts and the deregulation will end up prevailing over the tariffs and the control of imports.
Chris, you've always been a gold bull, and this has been there from last 10 years, where you've always, in a sense, advocated on various forums and in your newsletters that one should have a reasonably decent and a large exposure to gold. But given the recent rise in gold prices and how the speculative indicators are indicating that there is excess trading activity in gold. Do you think gold could also run into rough weather and it is time to book out of profits in gold as an asset class?
I think gold could have a big correction at any time, but I think gold will be higher in a year's time. So I think gold is trading remarkably well, and it's almost defying corrections because there's a lot of technical factors in recent weeks in terms of which would have suggested that gold should correct, but it's been extremely resilient. There's news flow on Ukraine which should lead markets to assume there may be an end to the war in Ukraine. Could have knocked gold, it did not. So for core, I would advise people with long positions in gold to continue to hold and just take profits at the margin. Obviously, if you own gold on leverage, you should take some profits. But gold's trading very well. And what's remarkable about gold, it's done so well, and there's been hardly any inflow into gold ETFs in the Western world.
So, Chris, what should be the return expectations from Indian markets now? If the starting point is today, which is beginning of March, a year from now, after this recent leg of decline in absolute term, not in dollar terms, can Indian market give double-digit returns?
Well, I think the key variable there is the dollar. Actually, if I'm wrong on the dollar, I think that will be hard. I think if I'm right on the dollar, that's quite probable. Because you see, if the dollar is weakening, then there's much more room for the RBI under its new leadership to ease policy, and I believe the RBI wants to ease policy. But obviously, if I'm wrong on the dollar, it remains very strong. It puts much more restraint on the ability of the central bank to ease. I still believe India is the best structural story in Asia and, in fact, globally. So while I was right to cut in my model portfolio, I definitely could have reduced India more in my greed and fear portfolios on a tactical basis. And I have to admit, the correction doesn't surprise me because, in fact, one was expecting. What surprised me was how long it took for the correction to happen. So last year we first had the surprise election result, and the market basically managed to deal with that very well. Then the market dealt with the introduction of the capital gains tax much better than I would have expected. So that was a big surprise.
Light of the decline in US market which has started, how do you think that would specifically impact India? Could India outperform this fall, or we are likely to align with global fall further?
No, I'm hoping, given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the near. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious. So China markets definitely, in my view, has bottomed. That's one of the explanations for the foreign selling of Indian equities in recent months. The emerging market investors had to rotate more money into China. So that was already happening at the end of last year, but I believe we got another wave of rotation out of India into China caused by the DeepSeek news. The DeepSeek news was positive for Chinese equities and in particular Alibaba. And then more recently, if you hadn't bought China already and you're an emerging market investor, you really had to buy China when you saw President Xi have that meeting with the major heads of the private sector companies in China, and you saw President Xi shaking Jack Ma's hand. So this is all. So China's got the best chance of outperforming if the US is going down. Europe is also looking better because last November, I believe Europe reached an all-time low in terms of forward PE relative to the US.
All right, so those were the big comments coming in from Chris Wood of Jefferies. But let's also tell you what is happening apart from the world of equities. And first up, External Affairs Minister S. Jaishankar is set to embark on a 6-day visit to the UK and Ireland beginning today to explore ways to further boost bilateral cooperation. He will first travel to London to hold talks with his British counterpart David Lammy on a range of bilateral, regional and global issues. They are also expected to touch upon the ambitious India-UK free trade deal. Pope Francis suffered 2 new episodes of acute respiratory distress on Monday that prompted doctors to put him back on non-invasive mechanical ventilation, wherein Pope Francis has been battling a complex respiratory infection and pneumonia for over 2 weeks.
Alright, then moving on to some weather updates. IMD issued an orange alert for heavy snowfall in Lahore and Spiti districts, with weather in Himachal deteriorating once again. In fact, locals in Chamba were forced to dig tunnels through snow to access their own homes. So that's the latest update as far as weather in Himachal is concerned. But tell you what, with that, we're completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.